I think what's happened here is that some of the analysts have failed to see the strain or the impact of the foreign exchange headwind on our top line. So what you see in Q3 is that we have a 5% headwind, which is linked to our US dollar exposure, which in the third quarter, as you know, the US dollar weakened a lot. Now, we actually feel that this is a solid year and a solid Q3. And why do I say that? Well, given the circumstances, we have stable sales. And in our nutrition business, which is 80% of DSM, organic growth has been 4 to 5%, with margins going up. So a pretty resilient performance. Now, some of the end markets, of course, in our materials business were impacted in the second quarter, but what we saw in the third quarter is an improved momentum, particularly in September and into October. Now, if you take, one of the most important KPIs in these times which is cash generation, we're actually up 16% year to date. And on the back of all of that, we've actually kept our outlook unchanged. So for us, it's actually more of a beat than a miss.
Dimitri, if I could bring that to you, interesting what Geraldine said about how you came through some of the challenges on the materials business during the lockdowns that we saw. Given that Europe is now heading into a fresh round of lockdowns, we also see high levels of the virus in the United States. How do you think that plays through the coming quarters?
Yeah, I think that will be the key question, right? So I think at the end of the day, we are much well prepared than we were before in quarter one. You've also seen that material showed a strong recovery towards the end of quarter three, and we see good order books for October, November. However, it's very difficult to see whether those are real market orders or whether the industry is filling their pipelines. It was a very thin pipeline throughout the whole COVID-19 crisis. And we do see that people are filling up the pipeline to prepare for full recovery. It's very difficult to understand from our customers that if they're filing an order for our products, whether it's just filling the pipeline or whether there's real market demand. With the resurgence of COVID-19, therefore, we are a bit cautious, and that's also why we refrain from an outlook for materials. So we have to see how November, December will look like into next year before answering that question.
Lovely to see you both today. Thank you very much indeed. A little bit weird seeing you both in different places, but I like it somehow. It's great. Now, look, let me start off with you, Dimitri, if I may, because you finished off talking about materials. I think you've got a longer-term problem there as well. I think you both have, because I was looking at last year's report. In fact, I've got last year's report on your website in front of me. Materials organic sales down 7%, negative 5% figure in terms of volumes as well. And, of course, we're seeing the same kind of thing this year as well. So is there a longer-term problem, regardless of what we're seeing with COVID-19, Dimitri, on materials?
I think there's a huge long-term opportunity. If we look at what's happening in terms of innovation in the materials field, then we do see a lot of innovation happening, for instance, in the mobility and connectivity field. Electrical vehicles and the new materials it require, that's exactly the hotspot where we are today developing our innovations. The numbers you've seen, you need to compare to all the other players in this space. And we are standing out because we have a high quality portfolio of the materials business. Let me remind you that after the intended sale of our resins and functional materials business, we have a remaining materials business which has an EBITDA quality which is normalized, which is above 20%. So this shows the strength and the innovation power of that materials business which is with us.